Good afternoon, everyone, and welcome to Stock Market Today. It's Ali, Coram, and Ken Shreve here with a look at the market for Thursday, June 8th, where we saw some gains, but volume was a question mark, Ken.
Well, we did have a higher volume decline on Wednesday, where we got distribution day for the Nasdaq and the S&P 500. We saw some decent gains today. Tech stocks rebounded a little bit, but volume dried up quite a bit, came in quite a bit lower than what we saw Wednesday. So take that for what it is. But I wanted to revisit Monday.com, MNDY, which is still looking pretty good in this market. Also want to check in on a biotech intracellular therapies, ITCI. And finally, buyers really coming into Adobe stock ahead of next week's earnings report. So I just want to take a look at that one too.
All right, let's do it. But first, let's take a look at the major indexes today. The Nasdaq up 1% after yesterday's decline. You mentioned the S&P 500 up 0.6%. The Dow up 0.5%. The Russell 2000 taking a bit of a breather today, but it's had a strong week, down 0.3% on the day. So Ken, we got what looked like maybe the start of a pullback for the Nasdaq yesterday, but back up again today. So what's your assessment?
Well, the assessment, what we've been saying is that we're still in a confirmed uptrend. And, we talked about the selling that we saw in the software sector yesterday. It was pretty violent in some cases. There were some stocks that were falling in heavy volume, others that were, falling in light volume. But, boy, you did see a lot of 4, 5, 6% decliners among top-rated stocks yesterday. So we rebounded today in heavy volume, and I think that this, like I said on IBD Live this morning, the uptrend still needs to be respected here. I know that the stock market bulls are looking at a higher volume decline yesterday and a lower volume gain today. Really not the interplay that you want to see. You want to see the declines in lower volume and gains in higher volume. So just looking at the Nasdaq chart here, you do see two above average volume declines in recent days. So that's important to monitor because that's just kind of a subtle form of distribution in the market. And when you see a cluster of distribution days, that's when you can really start to maybe not feel so good about the uptrend. But with the Nasdaq still holding above the 10-day moving average here, and distribution really fairly light.
All right. I'm not sure if you muted Ken or if it was me, but distribution fairly light at this time. So we'll get Ken's microphone figured out, but I'm now going to go to the S&P 500 to compare. And, as Ken was talking about, perhaps we could see some sort of a pullback for the Nasdaq. Not all too surprising, given how extended it's gotten above those moving averages. An update for the S&P 500, but a trading range developing here right under those August highs. So something else we're keeping an eye on. By the close, just 3.6% above the 50-day line. So perhaps some room to run there on the S&P. Let's also take a look at the Dow, up 0.6% or so today. We had a strong gain to end last week, and now we've gotten above that high. So a notable development there. Next stop, 34,000 perhaps. And let's take a look at small caps. As I mentioned, taking a little bit of a breather here, down less than 0.5% today, but still on pace for a strong gain this week. Ken, are you there? Can you hear me? All right, we're still troubleshooting Ken's.
I think I'm back.
Mic. Still. Okay, we can hear you, Ken. Go for it. Talk to us about what we're seeing in small caps.
Really big gains in recent days for the IWM here. And you can see this index, even though it tried to go down today again, it really just didn't really move much from big gains in recent days. So small caps still showing strength here. This was a really high quality decline for the index, just in light of the gains in recent days, and still looking very good here, and has broken out of a downtrend.
Yes, it has. And now we are going to take a look at IGV. This is the tech software ETF. And we're actually going to put Ken on mute because of the background noise in the office while he continues to figure out his settings there. Thanks for bearing with us today, everyone. But anyway, here's a look at IGV. You can see the sharp decline that we saw in many growth stocks like software stocks, also chip stocks in yesterday's session, but notable declines on Wednesday for software stocks, but bouncing here today. I think we have you now, Ken.
I think I'm back. Does it sound
Yes.
a little better? Okay. Just the gremlins are always at work. You never know when they're gonna pop up.
Yeah.
Uh, Yeah, so here again, we saw that sell-off in software stocks yesterday, and IGV did rebound a little bit today. But again, you see that all the volume that came into IGM yesterday, and then kind of a low volume rally today. So that's
Right.
really not the interplay that we want to see here. But IGV still holding the 10-day moving average, and that's really the story in the market. Even though we saw some pretty good selling yesterday, a lot of stocks are. The vast majority are still holding above short-term support levels, just like the major stock indexes.
And talk to us about what we're seeing with the 10-year Treasury yield reversing lower, breaking a 4-day win streak.
Yeah, well, we've got a Fed meeting next week, and the market right now is leaning towards no change. And the Fed has been raising interest rates for 15 months, 500 basis points in total. So it's looking like that they're going to stand pat next week and keep that Fed funds rate right at 5 to 5.25%. Then when you go to the July meeting, then the market's thinking, well, we may go up by another 25 basis points here. So this 10-year yield, it went all the way up to 3.82% today, but then started to weaken. We did see weakness in the U.S. dollar as well today. So to me, it looks like a long road back to that 4% level for the 10-year yield. But we're just going to have to wait for that Fed meeting next week. And again, pretty confident. The market's feeling more confident that the Fed will keep rates unchanged. But what the policy statement says, that could fuel more strength in the 10-year yield, or it can continue to just kind of flail around here below the 4% level.
Right. And now let's take a look at Monday.com, because since we saw some heavy volume declines in the software sector, how do we find the ones that are showing resilience? We did get a pretty sharp percentage decline for Monday.com yesterday, down over 6.5%. But if you look at the volume, it was just average. It wasn't a huge volume spike, and still holding above this recent trading range that it has developed, and snapping back today. Low volume though, but it's holding up pretty well despite yesterday's action, Ken.
Yeah, it still looks like a stock that's under some accumulation here, and you pointed out the recent heavy volume gains here. This is what you want to see. So it gapped above the 150 level when it reported earnings, and then it just kind of bided time around 150, and then it started moving again in heavy volume. So you just look at the two recent declines. Yeah, higher than the prior session, but also below average. So no surprise to see the accumulation distribution rating here still very solid at A minus, and that just if you see a stock that's rising in heavy volume, falling in light volume, you're typically going to have a accumulation distribution rating of A minus, B plus, something like that. If it's the other way, then you'll see that rating down to D or E. So like how Monday.com has pulled back, it was a sharp break of that 10-day moving average, but it looks to me like it's just retesting that prior 171.89 pivot here. So it doesn't seem like an extended stock, and really has proven itself a high quality name in the enterprise software group. Just look at that revenue growth in recent quarters.
All right. I think I'm having mic issues now too. It's kind of a funny day, Ken. Funny day. Those
I can hear you.
gremlins there. All right. I'm glad you can still hear me. Hopefully that sounds okay. All right. Well, what I was going to say was, on that move on earnings, it seems like for aggressive traders, that was an entry. Maybe they waited for it to tighten up and move out of that range a couple days later. Seemed pretty stretched by the time it broke out of the traditional cup buy point Where might the next entry be? It seems like it needs to spend, a little bit more time consolidating and let the 21-day line catch up ideally.
I mean, to me, like a small little starter kind of feeler position here doesn't seem crazy. I mean, ideally, buying that gap, was a good place to enter the stock. But the fact that it's still sitting near the top of this, cup base doesn't look too extended to me. If you go to the weekly chart, we'll just see where it is in terms of this, recent breakout. It's kind of right near the top of that cup base. So if you're risk averse, you can kind of wait for some sideways trading here and see if you get an alternate entry. But the way the stock is digesting gains so far this week tells me it's still a pretty strong stock and under accumulation. So still looks pretty good here to me.
Yeah, under accumulation in a big way with those weekly volume spikes, no doubt. Now let's take a look at ITCI. This is Intracellular Therapies, a biotech stock. And this group, Ken, is now 8 out of 197. So back in focus here. And I remember we looked at this stock earlier in the week. I believe it was Monday. You were talking about this stock being potentially actionable as it was bouncing off of its moving averages.
Yeah, I think we were talking about it on IBD Live earlier this week, but yeah, I like the look of the weekly chart here. So this is a stock that is this is when you see a test of the 10-week moving average, this is what you want it to look like. Even volume so far, it's not huge volume this week, but it is going to be higher than what we saw last week. And you can also kind of look at this big pattern here as almost a cup with handle base, and it's just kind of drifting lower in light volume and forming that handle area here. So I think this is a good biotech to watch. They're doing a lot of innovative things. They do have a marketed drug that is generating meaningful revenue that treats by a form of bipolar depression. So this is you can see the triple-digit revenue growth here. The fund sponsorship is always also very impressive at ITCI. Got some funds in the IBD Mutual Fund Index that own shares, and you can see nice ramp up in fund ownership in recent quarters. So for a biotech, it's not profitable yet, but you have that good revenue growth and you have good fund sponsorship. That's a good starting point to know that you're looking at a good stock to research. And the technical picture here looks very strong as well. Another stock to me, if you go to the daily chart, showing signs of accumulation. It kind of worked its way higher on the right side here. Notice when it tried to decline yesterday, it declined and then closed all the way up near its high. So I think just overall it looks good, and I like the revenue growth and the fund sponsorship here too.
Thanks, Ken. Last on our list is Adobe, reporting earnings next week. Software giant, and it too is part of this AI craze. Recently announcing some AI capabilities for some of its design products. We've got earnings coming up in a week, so next Thursday. A strong move today in some volume, and this was that AI hype those couple of days there on 525 and 526 especially. Seems like it cleared an early entry at that point, Ken. But what about now? Has this really paused long enough? And now are we getting too close to earnings to really do anything about it here?
Well, again, kind of the theme today is under accumulation, right? So Adobe, as it crossed that 400 level, and just before that, volume was pretty heavy. It fell sharply yesterday in higher volume, but look at the volume today. It actually rallied back in even higher volume. Now, there was more AI news here. They have this Firefly generative AI model that they kind of released for enterprise customers, so users can generate images via text. So interesting nonetheless. And the weekly chart here, it's really at the top of a long consolidation, which I think is compelling here. And the pattern rec is kind of recognizing that. So you've got, several up weeks in a row, but this stock would fit the bill for an option trade. So it is the focus of my earnings preview column that will appear over the weekend. Very light in terms of earnings next week, but we do have Adobe and Oracle. So I decided to take a look at a call option trade for Adobe this week.
Nice. And yeah, in terms of being too late to do anything about it, the reason I say that is IBD typically likes to have some sort of profit cushion heading into the report. And so, of course, the closer you get to earnings, the greater chance it is that you're not going to have a profit cushion. But a way around that is with earnings, Ken, because you can get a slightly out of the money call option, and then your downside risk is the premium you pay for the option.
Yeah. So I just at the time I was looking at a 435 strike price. So depending on where it's trading next week, you just want to look at the underlying stock price and pick a strike price that's either very close to where the stock is trading, or maybe just a little bit slightly out of the money call option. So when I was looking at the 435 call, it was a trade a little over 4% downside risk, expiring January 23rd, I think is, or January 26th, whatever that Friday is.
January or June?
So June. Yeah, I have the month wrong and the date wrong, but whatever. Friday is either
Friday
June
following.
Yeah, the Friday following next week. So, but I think it's setting up well for an option trade here. And I mentioned, buyers definitely coming into the stock ahead of earnings, expected to see another quarter of bottom line and top line growth. And I think Adobe is pretty well positioned here.
Yeah, and next Friday would be the June 16th expiration. So check out Ken's article for all the details on that. All right. Thanks so much for watching, everyone.
We made it.
We made it. Technical difficulties and all. Thanks for hanging in there with us, everyone. I just want to point out, speaking of audio, it's very important to have good audio, because as the stock market today is now available on podcast versions. So if you go to Spotify, Apple Podcasts, you're on the go and you just want to listen to this, you can join hundreds of others who are already doing so. So you can find Stock Market Today with IBD wherever you get your podcasts. So check it out. And now that we've gotten all the audio glitches out of the way, it'll be smooth sailing from here. Also want to flag investors.com/events. Definitely want to stay up to date on our guest lineup for our various shows. And I want to flag that it is Leaderboard Free Access Week. So if you are interested in looking at the Leaderboard team's picks, analysis, stocks on our watch list, and stocks that we're adding to Leaderboard, go to leaderboard.investors.com and get started with that today. And you can also check out a webinar that Ken and Justin did yesterday at investors.com/videos. Just scroll down to the webinar section, Ken.
Yeah, it was a good webinar that we did, and we've been busy with Leaderboard. Had a nice day of outperformance today with several top gainers. So we've been busy. We've been kind of increasing our exposure a little bit, and added a new name to the watch list as well today.
Great, busy. All right, everyone. Thanks so much for watching, and we'll see you right back here tomorrow.